servants. We'll bring you those remarks live. But in the meantime, I want to get back to the markets. We're down just about 147 points on the Dow Jones Industrial Average on this Monday. Let's get some strategy, get some perspective from Mark Matson. He's joining us now from Matson Money, CEO there, and he says, don't believe the hype. Mark, you weren't convinced at last week's rally.
Well, I don't want Main Street investors to buy into the hype of Wall Street or the horror of Wall Street. They're both destructive. Investors need to understand where long-term wealth creation comes from, and it doesn't come from trying to predict or forecast where the market's going to go in the next month. Where it comes from is mutating technology. Before 2007, there were 0 iPhones out there in the world. By the end of this year, there'll be 100 million with 500,000 apps, including an excellent Bloomberg app, by the way. And that's where the technology that's going to lead this market into the future is unimaginable to most Main Street investors today.
Okay, so you have about $300 billion that you advise on. What portion of that is invested in tech right now? What's your best idea in that space?
We don't really parse it out by tech. We parse it out by size, but we own over 12,000 equities. So we own the Googles, we own the Facebooks, we own well, we don't own Facebook because it's not public yet, but we own all the small players. And we own, of course, we own Apple. And through all these mutating technologies, the premium for equities long term is in the space of around 9% in excess of inflation. So what that means is investors have to set through these volatile times. There's no consistent way to get these long-term returns without going through the volatility, and they need to be rebalancing and buying more equities when they're low, like today.
You have 12,000 holdings in your portfolios.
Yeah,
so
you know, it was interesting.
How do you understand the individual stock stories on that?
You don't follow individual stocks. What you do is you look at market segments. We're in over 44 different countries, 12,000 different stocks, and the returns come from capitalism and wealth creation and mutating technology. And what investors, I was just at a seminar yesterday for 300 advisors in Indianapolis and investors, and they said, how many stocks do you need to be diversified? I said, you need over 11,000, and it blew their mind because they were thinking you needed about 40 or 50.
Why?
Why? Because if you look at the long-term expected returns for equities, you do not reduce the long-term expected return as you add equities. What you end up doing is you reduce the standard deviation. So that's a free ride. If you ask most investors or advisors, do you believe in diversification, they'll say yes. But the key to diversification is continuing to add equities to your portfolio to reduce the volatility. That way you're not getting stuck with an Enron or a WorldCom or any of these companies or Solyndra as they go bankrupt.
All right, we are waiting for President Obama to begin speaking. Just want to acknowledge to our viewers that we're monitoring the arrival there. President Obama jogging to the podium, jogging off of Air Force One, and he's expected to begin speaking in just a moment. And I want to actually thank you, Mark Matson, for giving us your perspective on the markets right now. We have to dip into the president when he begins his remarks there. He is trying to push pieces of his jobs bill